A rally in tech has boosted the market over the past few years. You know that, right? Over the past year alone, the sector is up more than 25%.
But we've got one strategist who says the tech trade is over, and there's a new sector to buy for the second quarter. Joining us now is J.C. Parets, Eagle Bay Capital founder and president. J.C., good to see you again, my friend.
Thanks for having me.
You don't merely think that tech is that. You really hate tech right now. Why?
Yeah, you know, we're seeing rotation into what traditionally are late cycle sectors. You know, utilities. We've seen big moves in the utilities all year, specifically recently, and now we're seeing money rotating into energy.
I got to force you on this. You hate tech because you think it did well in the beginning and it does badly at the end of a cycle.
Precisely. This consumer discretionaries, financials, technology, these are early cycle sectors. These are the leaders off the bottom. Remember, technology bottomed in the fall of 2008, well before the market overall. Those were the leaders to the upside. And then if you recall, when the stock market peaked in 2007, energy continued to lead, both on an absolute and relative basis, into May and June of 2008, 6-7 months after the overall market top.
So you are saying rotate out of technology and into energy. That's a big sector. They're the guys who extract the energy. They're the guys who refine it. And then, of course, the ones who actually sell it at the retail level. What area do you like right now?
I like the big ones, you know, Chevrons, ExxonMobil, Conoco. They pay nice dividends, right? Conoco's like 3.7%.
So the integrated ones,
yep.
Soup to nuts.
Absolutely. You know, you look at some of the other ones, Schlumberger, Halliburton. I specifically like Phillips 66. These are great charts, both on an absolute and relative basis. And again, like I said, this is very normal, healthy, traditional, late cycle sector rotation. I think it's normal.
Now, when you look, if you can keep that list up as long as you can, producers, because we really want people to be able to write them down. As you look as the individual oil stocks represented here, have you gone back and seen how they do at the end of a bull cycle?
Yeah,
I mean, each individual stock here has done well.
They tend to do well as a group, especially on a relative basis, because again, remember, if the stock market overall gets crushed 20-25%, I promise you, you're not going to get 25% rallies in these stocks. But on a relative basis, they're going to hold up a lot better. We saw that in 2008. I think we're seeing that again.
There's a decent dividend play, too, right?
That's right.
You get paid to wait?
That's exactly right. So I was on the show a couple of weeks ago. We're talking about interest rates. We're talking about the bond market, right? Bonds, new highs today, 8-month highs, 10-month highs, something like that. On the 30-year, new lows today on the yields. So if you're a fund manager and you need yield, you're not getting it in the bond market. So where do you got to go? They're going into utilities, and energy's got some sweet dividends as well.
Dividend play is back entirely?
If you need yield and you can't get it in the bond market, you have to get it somewhere in the stock.
The only place you can get it. But we're missing a larger point here, or not missing it, but we haven't talked about it, which is because this is already happening. You're seeing, obviously, today a big move out of tech, move into energy. This is a sign of an aging market. This is a sign of the end of that movement to the upside, is it not?
We're over 5 years into this bull market, so historically, is it crazy to think that we're towards the end? You know, obviously not, and we're seeing that rotation. Financials on a relative basis peaked last summer. Technology peaked on a relative basis. Consumer discretionary is the worst sector so far this year. These are early cycle names. Those are the names that tend to underperform towards the end, and energy tends to outperform, so that's why we like energy.
He makes a passionate argument. J.C. Parets, good to see you.
Good to see you again. Thanks very much.